Good morning, everyone. I'm Jeff Roberts, the crypto editor at Fortune Magazine. I'm very pleased you've joined us this morning. Should be a good panel. We've got 5 payment experts who are going to explain what, if anything, exactly USDC is going to be doing with these big companies. Just for the sake of time, I'm going to let our speakers introduce themselves, so please just your name and your company and what you do there.
Thanks, Jeff. Hi, everyone. I'm Ash Sharma. I am from checkout.com. We're a payments processor, and I lead crypto partnerships globally.
Hey everyone, I'm Cyril. I'm at Stripe. I help lead the business efforts around crypto, and excited to be here.
I'm Kai Sheffield. I lead the crypto product team at Visa.
Raj Thamodran. I'm with Mastercard. I lead crypto for the company.
Great. And I'm João Reginato. I work at Circle. I lead the stablecoin product teams at Circle.
Yeah, João, I'll just kick it to you first. I guess just make the case of why USDC is going to be part of commerce and merchants. I mean, given we've got some very good payment systems right now, you know, Visa, Mastercard work pretty well, so do the other things. Why do we even need USDC in payments?
Yeah, let's kick it off, I think, with some controversy maybe. I don't know if there is controversy there. But I think there's a lot of conversation in that space and how stablecoins can potentially disrupt commerce. And I think they can, but I think not in general in the way that people talk about it. Because I think the model when we design a stablecoin like USDC, we look a lot at cash. So something that's very, very primitive, very base layer in commerce, if you will. And it has some good quality properties that I think when people talk about digitizing forms of money, you would want to have them, right? So things like instant settlement and finality, that's a good property that we look for digital solutions that underpin commerce, irreversibility, cheap infrastructure, things like that, scalability, all those things. So when building a base layer component like USDC, we look for all those things. But then I think a lot of people say, oh, that's fantastic, and look at how it works, and into the future, everybody will be using USDC to go to Starbucks to pay for coffee. I'm not too sure about that. I think commerce is a lot more complicated than that, and just to use the cash analogy as well, cash also has a lot of problems, right? Cash, can be forfeited. Cash, doesn't have anything to do with loyalty or incentives when it comes to commerce. And I think all those things have to be built on top of this base layer. So I think the way that we see actually as we build currencies like USDC and EUROC is we see them a lot more as a protocol for money, right? So they are a way to represent fiat currencies in digital form on blockchains. Can they be used as bare instruments for commerce? Yes, they can. Is the user experience good? Honestly, no, clearly not. And do we need to build layers on top of that to improve how commerce can be done in this new foundation? Absolutely.
Interesting. Let's kick it to the credit card guys. You want to start us off? Kai and Raj, you guys, Visa and Mastercard, enormous, very successful payment companies. How are you looking at USDC? What, if anything, are you doing with it?
I'll start. See, we're really excited about the opportunities that USDC has, really because it enables blockchains to become effective settlement rails. Before stablecoins existed, if you wanted to use a blockchain as a payment rail or to settle payments, you could only transfer volatile currencies over. Now that you can represent dollars and move them over these new next generation blockchains, it has these interesting properties that João mentioned. And so today, we have a global payment network of 15,000 plus banks. We've got 80 million merchants across the world. We can authorize payments in real time 24/7, but when it comes to actually moving the money, we're dependent upon existing bank wires and rails that have been around for a long time and might only work during business hours. And so we don't have the same flexibility around how we actually move money as we do around how we authorize it. And so we've been testing ways that we can incorporate USDC as a settlement rail and settlement currency form factor to actually speed up how we can move funds between card issuers and card acquirers, even when the payment is still authorized in real time over our network today.
Yeah, I agree with a lot of that, and it's really about bringing utility to people who are native in crypto today, and they would like to settle their obligations, bilateral obligations, using crypto with the other entity. An example of that would be we have many crypto cards in the market, And the crypto cards are often issued by crypto wallet providers. And they have a reason to settle that at the end of the day. And that's something that they can do through USDC today. They find it valuable because they are native in that, they're liquid in that. It is easy for them to get from a BTC or ETH to a USDC than to get to fiat. And they can do that 24/7 through exchanges that are available and you guys have set up. And that's useful. And I think the reverse can be true on the merchant side as well. But although I agree with you that the Starbucks is not looking to get paid in USDC, and I don't think the consumer is also looking to spend, saying, oh, I want to, they have assets. They want to be able to spend assets, and they want choice in terms of where they can use it. They're not making a conscious choice of, I need to actually pay the merchant in a specific currency. So I'm sure we'll unpack that a bit as well.
Yeah, and for Stripe and Checkout, less familiar names to ordinary consumers, but I understand it, enormous companies that basically want to pay for anything on the internet who go through you guys. So how are you looking at this new USDC protocol? Do you buy this narrative that it's going to change your world? Or?
I think it's kind of what Raj and Kai touched on earlier. It's about choice. So for us and who we serve and what we enable, we're enabling the money movement. In particular for us, we've got two sides of that. We've got how merchants receive their funds, and we talked about liquidity and this being a new form factor. Our job as a payments processor is to give consumers and merchants choice of methods they can be settled in. So I do think this has got a very good place in the ecosystem, but we're in an early adoption stage again, right? People are still writing checks. So our job as a payments processor is to give the optionality. And then through that, there are two different types of benefits. For the merchants, there's liquidity. There's our ability to also help them settle, not just in fiat, but with USDC. So I think there are some real-world utility use cases, but it's about us enabling the optionality.
Yeah, I mean, I think just continue to echo, but what everyone said, but putting a twist of how we've approached it, looking at this as just a new rail. I think Stripe's history was started by the Collison brothers wanting to build a simple abstraction and make it a lot easier to accept any developer to accept payments. We actually in 2014 tried accepting Bitcoin as a payment method, and lack of demand and volatile currencies, all the reasons that were mentioned, that never really took off. But with the advent of faster blockchains and stablecoins like USDC, we decided last year it was the right opportunity. I think the one kind of approach that I'd mentioned that Stripe takes is really just trying to be use case driven. We just actually, Guillaume, who leads our crypto engineering team, just did a demo on the main stage of the first product we launched with USDC, which is payouts or disbursements. There's lots of creator economy or platforms that are on Stripe types. And they had a problem. We have, Stripe was able to pay out in 50 countries wherever we had banking rails, but not another 150. And we say we want to serve and increase the GDP of the internet. And so the example I always give is we have a blogger that's in Vietnam maybe, and they want to get tipped or paid by someone in the US, and we weren't able to do that. And so what we did last May and last week we announced we're extending this to 110 plus countries is the ability to now pay out that creator in USDC. And so that gives people an option that they didn't have before. I mean, there's still some problems to solve there, such as the last mile, but we think it's a good use case that helped us kind of extend an existing product for us.
So if I'm hearing this right, it'll make your operations more efficient and fast. But in the bigger picture, I had an interesting talk with Jeremy Alarius, the CEO of Circle, and he's an old telecom guy before he was USDC guy, and he was early in disrupting the big monopolies of AT&T and Verizon when VoIP kind of commoditized communications. And we've seen a similar thing in other industries like music. Those of you old enough to remember CDs, where if you wanted a song, you had to buy the whole CD. Bundle it, and monopolies that way. And Jeremy's thesis is that this has finally happened to finance. The internet and finance are converging. But what's going to happen is this is going to wipe out the intermediaries and who make a nice little cut of 2 or 3%. And the thing that comes into my head for you guys, is this not sort of an existential threat? I mean, because you're all kind of middlemen in a sense. And does this thing risk eating your lunch? I don't know who wants to take that, but that's what comes into my head.
So maybe I'll go with that first. We don't see it that way, and for a very simple reason. So I think we already kind of touched on some topics here, right? At the end of the day, when a consumer, let's take a consumer to merchant flow, there is a lot that goes on in terms of from a consumer perspective and a merchant perspective that makes that flow trustworthy. The irrefutability of the money itself that you talked about is important, But there is also a number of other steps that are there, right? So when a merchant receives the money, it needs to be spendable. It needs to be instantly usable. We call about this as a spendability test. How do you take that form, what they've received, and use it instantly? If it's a merchant in a remote part of, let's say, a country, they need to be able to receive that in the local currency so that they can then pay out. So the use case that he talked about is you were talking about in sending USDC. USDC is absolutely solving an essential problem in an intermediate layer. But at the end, you need to convert that into a currency that the person can spend. This is also about, there are many people involved in enabling these funds. And it's also about making sure that you can reverse that in a compliant way. There are a lot of things that go wrong. Technical errors go wrong. People don't deliver the goods that they promise that they deliver. So all of that need to be set up in a way, in an end-to-end way for the use case to work. So this absolutely can be a key building block, and we are using it today. We look forward to expanding the use cases, but there are a lot more pieces to be solved for on top of it.
Cyril, you want to take a crack at that one? Is this both an opportunity and a danger?
Yeah, I mean, we asked ourselves that question, I think, when we were deciding how much do we lean into space. And I think it could be a disintermediation if you're not thinking about the value adds. But I think Joel said one point that I really agree with is that, there's a lot of steps that still remain for this to become mainstream. And we think there's value adds that all the companies on the stage can add. And continuing on what Raj said, like the example that Stripe's doing today and paying out the creator, one of the hindrances from making that quote unquote mainstream is what do they do with the USDC when they get it in that local market? Are they able to spend it? And maybe the companies up here can help with that. The networks maybe could issue a debit card so they can spend it easier. But otherwise, they need to have it spendable in local currency. So you need liquidity, and you need to get that converted into local currency. And the last thing I'd mention is trust. A lot of the crypto folks I know always say we want to displace the card networks, et cetera. But actually, when a merchant sees, in my opinion, that Visa or Mastercard logo, there's an element of trust there that if I got frauded or there's a chargeback on these sorts of things, I have recourse. And so I think while there's room for improvement and efficiency in all the counterparties and all the fees that are passed on, I think there's value adds to be had, and that's what I think the companies are here trying to figure out.
And I think trust and compliance also goes together, where when we talk to large merchants today, many of them are not comfortable just putting a QR code up on their site and having anyone pay them from any wallet. They want to understand that the consumer on the other end is using a wallet that has been KYC'd. And then for a consumer, it's kind of a feature and a bug that anyone can put up a QR code that can accept USDC, but how do you know that that merchant is who they say they are, that you're going to get those goods, and when the goods don't show up, what do? There's not a whole lot in some of these direct flows. And so we think that digital fiat currencies like USDC and traditional fiat currencies will coexist for a long time, and they're just going to be gradually embedded into the existing payments ecosystem. And I think that's really success. And when USDC has mainstream adoption, it'll be people don't realize they're using USDC, they're just using dollars, right. And it's a new technology that dollars are running on behind the scenes.
Yeah, just want to go to compliance quickly. Some of the stuff's above my pay grade, but for this to work, I sort of sense that do we need some laws to be in place for this to happen? Because earlier disintermediations with music, I mean, those of you who remember the Napster days, people were just stealing music left and right. The technology was correct, and it sort of worked itself out eventually. But I mean, this is a money system. This is the Exchequer. This is a Federal Reserve, and governments are very protective of that. And then even for accounting standards too, putting the stuff on the books and stuff like that. So I mean, how much of this stuff can you do now, and how much are you waiting for kind of the appropriate kind of legal framework to be in place? I don't know if you want to start us off on that.
Yeah, definitely. I think for us at Checkout, we like to be really entrenched with the regulators. I think all of us collaborating with them is only going to benefit these new form factors coming in a safe way for consumers and businesses. Especially for our business, we serve all the top exchanges that want on-ramp and off-ramp. We look after like some Netflix, Liveroo, and what we've noticed is they're all looking at it from a non-traditional perspective as well. We did a crypto report, and I think it was 37% of treasurers are looking to have digital assets out on their balance sheet. So when the regulators start to look at it permeating into traditional banking and it having a stored value, I think where the regulators are going is really interesting. The European regulators taking back off digital assets and using fiat guardrails and the way USDC is structured is a really good way for it to be eased into the ecosystem and in a safe, compliant way. We just need all regulators to have a clear taxonomy. I think, but it's certainly co-collaborating, educating, and with the right safeguarding, it will slowly permeate and become quite an effective method, I think.
Yeah, and maybe this is a dumb question, but just from an accounting perspective, like having USDC on your balance sheet, is that like kosher? I mean, when you do your accounting and your public companies and stuff like that, is that, can you have that beside, your pounds and your dollars? Or I don't know if anyone's familiar with this issue, but.
We've seen an emergence of innovative tech coming out of this for how you report an account with digital assets. And a lot of it's being built off kind of what the regulators have been giving as guidelines. Now it's quite dynamic, but it is a new stream. And the way it's treated is I think, still being formulated, if that makes sense. We're still in an immature phase.
So Jeff, the question that you asked before is a very, very good one, which is like, how do you think about compliance in the space, right? One is about the instrument itself being well constructed in a compliant way in a given jurisdiction. USDC has a framework for that, and that is one. Second, how do you, as this currency travels about, it is in sometimes custodied wallets, self-custodied wallets. How do you deal with, there's an ecosystem that's trying to interact with it. How do you look at compliance there? I think that's quite important as well. So for one of the things that we do in this to help is we today score every public blockchain address in the world for most of the chains, every transaction in the world, every virtual asset service providers in the world. It helps people kind of interact with it. You may not be the person KYCing every address, but you at least have a set of analytics available about how you interact with them. So what it does is it increases the combinations in which these public chains and the addresses and the assets can interact with the financial institutions. And I think that bridge can help. And it's great if there is a jurisdiction where it's a very clear set of rules about when you can deal with these wallets, and when that is all emerging, analytics help, risk scores help. So that's how we think about it.
Anyone else want to weigh in on the accounting and the compliance?
No, I think it's a hot topic these days, and I think we definitely need more clarity. That's what we hear from the ecosystem, that we need more clarity from a regulatory point of view. To answer some of these very simple questions, how do you account for it? How do you pay taxes? And hopefully, I think we're all extremely anxious and hoping for that clarity, at least in the US.
Just want to shift a sec. I mean, this question always comes up at, payments conferences thing, but central bank digital currencies, CBDCs, why doesn't the government just do this? But, as far as I've heard, it doesn't make sense. Government's not very good at building technology. So you live in the States, you really know that. But, the other thing, too, there's another couple compelling reasons why CBDCs are kind of a bit of a red herring, namely that, the banks don't want that. It would denude all their deposits. You don't really want to blow up the existing banking system, and also the privacy thing, too. I mean, this might be great for the Chinese Communist Party, to survey every citizen's transaction, but I think in free countries, we don't really want that. So, I mean, my read as a reporter is like this thing's kind of a non-starter. Central banks are dabbling around figuring out how it works, but CBDCs are not going to be a thing. Does anyone agree or disagree with that?
I would say that the private sector has led payment innovation, and there's an important role for governments to play, and you need public and private sector partnerships. I think what's unique about stablecoins, they're really this bottoms-up technology where they're a developer platform, and so just the way that USDC has approached multi-chain, you now have 12 blockchains that you can use USDC on. There's a lot of experimentation happening in the private sector on what are the use cases, what problems does a digital version of a fiat currency solve? And we think that can be more productive than, it's very hard to sit back and design a top-down system and choose one network that will support every use case for fiat in the future. And so we're spending a lot of time engaging with central banks across the world, really helping them to look at stablecoins and use that as a lab to understand the use cases for digital fiat. And we think that there will be some countries that take more of a public sector driven approach and go CBDC first, some that go stablecoins first, but there's a world where they coexist together and can interact with each other in the future.
So I totally agree with the coexisting part. I think both would be there. There is also a nuance about what the government's goal is and what they're trying to do. I think in general, they're trying to modernize how payments are made, and there are multiple systems available. I think there is this important notion of is the government going after a wholesale setup, is a structure by which a central bank can settle efficiently with the member banks, the commercial banks, or this is a retail thing. I agree the retail thing is not yet well articulated about why that would actually solve a pain point for somebody out there. We, again, engage this. We have what we call as a virtual sandbox where we invite the governments to come and experiment, design new currencies, and see for themselves about what problems they solve. And many governments are focused on the wholesale side. Some are focused on the retail side. But I think it's going to be a mixed world. Again, I come to the end too, and we launched there was a sand dollar project and in Bahamas, and when we wanted to open this, when the government wanted to open it up to everyday payments, the best way was to actually launch a card, because it's the one that gives the most utility.
That's a good use case to look into, actually, the island pay solution in Bahamas, like a Bahamian wallet, where the government has found a place for, like you touched on, optimal kind of processing efficiency to use it as a disbursement mechanism. So I think we're going to find interesting use cases come out of that.
Do you, let's just stick with that for a sec. Do you mean, I remember like in the height of the pandemic and the need for quick stimulus payments, and some people are like, if we had this, it would have been a lot more efficient. Is that what you're talking about, just sort of for transfers to citizens?
Absolutely, and kind of what Raj touched on there as well. The wallet is like, again, optionality for end users. So if you're receiving the disbursement, the ability then to off-ramp that into your Mastercard, or then to have different ways you can spend it, I think is where it kind of comes to head.
But in the case of the Bahamas, is it a USDC thing, or is it more like a Fed coin thing?
It's a Fed coin thing for now. But they are working on, there's a couple of initiatives they're doing, because they realize that they can't just have a solution that's solving one side of the equation. So they're speaking with merchants on how they enable native acceptance on whether it's a stable coin, or whether it's the CBDC, or whether it's various tokens that they'd like. So I think the really interesting approach about that government is they're getting really stuck in. They're like, okay, let's talk to the grocery stores. Let's have this as a government-led initiative. And I think that's where we might see the tipping point.
What about the privacy thing, though, too? I don't really want the government knowing where every dollar I spend goes.
They probably already do.
Fair enough. I want to switch again and pick up on something that Kai said about building applications on top of the USDC protocol. I'm still trying to get my head around this, because I know Circle's really selling USDC as a platform, and I understand like the Apple's App Store as a platform. I understand Ethereum as a platform, but USDC as a platform, what are the killer apps going to be on top of it? I mean, do you guys all buy this theory, or like how is this going to play out in reality?
I can start. I think it touches well on I'll touch on something you mentioned before about disruption, and I think that's the disruption I think that we talk about, that people easily misinterpret and say, oh right, so that means Visa and Mastercard are going to go away and this will replace that. That's not the case, but a protocol for money like USDC is extremely powerful exactly for those reasons, right? It has all these quality properties that I think everybody understands a little bit more easily. It works 24/7, it's nearly instant, it's nearly free, all these good things. But the programmability is the part where it will allow new forms of businesses and new forms of settlement and exchange and commerce to be built, right? Potentially by companies like Visa and Mastercard and Stripe and Checkout.com, and everybody will have the ability to utilize that in different ways. But and it touches as well on the point about CBDCs. Will CBDCs be programmable? Will they be permissionless from that sense? I mean, anybody can copy USDC on chain, can create a wrapped version of USDC on chain, slightly change the behavior. I can create my own dollar currency if I want to send it to my kids and constrain their spend to only things that are not sweets or something like that. Like this is free and it is programmable, and it's up to really the creativity of the ecosystem to build. And obviously there needs to be checks and balances, so this doesn't diverge into illicit activity and stuff like that. But I think that's really where the power comes from. And I think it is actually hard to say. I think I've been asked before, but what are the use cases? What are people going to do with that? I don't know. To me, it's like asking, what could people do with a mobile phone that has a GPS? And, all of a sudden, Uber was created, but nobody predicted that Uber could be created and disrupt transportation. So I think it's similar.
Yeah. I think increasingly we feel like developers will build the future of payments, and stablecoins can help lower the barrier to entry to build new financial services. So if you ask yourself the question, what would it take to build a product that looks and feels like Venmo? Who could actually do that and where are they living? You now could have teenagers at a hackathon in Nigeria that could build a non-custodial wallet that can have a front-end interface that can save, store, and spend, a dollar-denominated currency. And so we think there's something super powerful about the ability to put that technology in the hands of developers, particularly in markets outside the United States that don't have the same fintech and banking as a service ecosystems, that now they can build dollar-denominated products on top of USDC.
And if you're thinking of USDC as a protocol or a programmable layer, in the Venmo example, like I personally think it'll be killer when people don't need to know that it's a stablecoin underneath, right? It's just a dollar-denominated value, like Kai said, right? And I think that opens up a lot of possibilities.
Yeah. Sticking with the developers for a second, it's sort of a basic question. I'm not a coder, obviously. How hard is it to program USDC? I mean, I know, like, what programming language you need to know? Like, Ethereum, you need Solidity, and, Bitcoin's, of course, a harder language. But what is the language? Or, how hard is it to do that?
It is pretty hard. I was actually on a panel yesterday that we were talking about that. I think we talk about a lot in this industry. We have found some good applications, some killer applications like stablecoins, but how do we bring the next whatever billion set of users? I think you can't answer that question before you answer how do you bring the next 10 million developers into the space. And we still are in a phase, I think, similar to how maybe the early internet phase was, where it's still pretty hard to build on this kind of infrastructure. I mean, if you have to go down to the level of writing smart contracts to interact with the USDC smart contract on different chains, that is very different from chain to chain. If it is an EVM chain, if it is a Solana, it requires very, very deep and complex skills because you're going to be dealing with manipulation of bytes to touch money, and it's particularly scary to do that. We need new layers of abstractions. There are a lot of companies building now better tools for blockchain development and layers of abstraction. I think even what we announced yesterday in having, for example, now a protocol to allow for seamless transfer of USDC across chains, even that we see as a developer tooling, right? Because then developers can abstract the chain that they're coding against. But I think we're still in the very, very early innings of that.
But what is the programming language, and is there something equivalent to like the Bitcoin core guys, or like the that sort of Ethereum course is public, but the reality is there's some sort of developers who are kind of pulled off the merge and stuff. Who is the equivalent in USDC, and what are they writing the stuff in?
It really depends on the chain. It could be something like Solidity in Ethereum. There are JavaScript-like versions of that in EVM-compatible chains, but then you go to a blockchain like Solana, and the tool set is completely different, and so on and so forth.
Anyone else want to weigh in this? I'm obviously way in over my head, but
I think you said it very well in terms of we need the layers of abstraction. I kind of see this as years ago we had a system, let's say a bank one, and you have a deposit in bank one and a deposit in bank two, and if you didn't have a system connected to move money, you're dealing with as bank one money and bank two money. The bridge that was demoed yesterday is a good example of how we can start to build that. But for people to fully treat this entire set chain independent and be programmable, you need an abstraction layer above it. I think many companies are building it. I think that will really open up that then developers don't have to worry about which network the money is in.
Yeah, I would just say that's something we're working on. I mean, I think, again, Stripe's obviously focused more on the payments and moving of value use cases, but that payouts example that I mentioned is where, hey, now you're already with the Stripe Connect platform, you're already on our APIs, you can just pick USDC as another currency in there, so you're not learning you're not needing to have to go develop on which chain it is. And right now we support Polygon, we support multiple chains. We're developing more products like that. So I think based on your use case, to your point earlier about, what value can the parties up here add, I think that's one of the values we think we can add is just same Stripe API. I can now use USDC as just another currency in these other products.
Jeff, I'm no expert, but I'm like you on this, but I think Polygon is a really good example, right? Their ecosystem, what they created, I believe based on their consensus mechanisms and how it operates, again, don't call me an expert, they're coming up with the ability where you can move assets across different chains, and I think that is really interesting. And the ability to move an NFT that you earn in one gaming ecosystem to another, the transfer of value of if you have an ID and you're a player on this gaming ecosystem, then you can shift it over there. The emergence of interoperable tech is going to be a really exciting, I think, corridor for us to watch out for.
Yeah, exciting might be one word for it, but when you're talking about like bridges for, money, if you follow the crypto industry at all, the word bridge should make you really nervous. Because that's like the most, popular target for massive hacks of hundreds of millions of dollars. And and likewise Polygon. I know it's popular, but I've had people tell me it's held together with duct tape and marketing. I don't know if that's true or not, but we're not talking about like moving, pictures or songs around. We're talking about moving, the world's money around. Is this maybe a little soon, and should we slow down before deploying bridges to move the world's currency around?
No, I don't think so. I think we need to advance. The world in that space is moving extremely fast, and I think we need to catch up and keep making sure that it is seamless, particularly for developers, as we have been talking about. The other, yes, it is very. As Raj mentioned before, I think we need to be extremely careful with what we are doing. At the end of the day, we are representing something like the dollar in digital form in all these different ecosystems, and security, obviously, it's paramount. But at the same time, considering the diligence that, for example, we do before bringing USDC to a blockchain, if you assume that that's being done well, and I trust our teams that that's being done well, then actually, if you think about USDC again as a protocol, what we're really trying to do is to convert these formats across all these implementations in the most seamless way, right? I think Visa, Mastercard, and payment systems in general, we do a lot of conversions all the time, whether it's XML to some other format, right? Like at the end of the day, money is technology and it is data flowing in all these networks, and you have to interconnect them and make them communicate. I think bridges are more focused on allowing that to happen from blockchains.
I think for us to think that it's the one thing that's going to solve the risk away is not right? So it's going to be a combination of things that's going to take. It is the protocol, and if there is a bridge that connects, that's great, but you also need other fail-safe mechanisms that institutions can provide. There would be a fail-safe that you would provide as a USDC designer, for example, and there is, for example, your kind of redemption guarantee is something that you guys do today. So similar to that, and there are other people who play roles in the Stripe and Checkout, and networks like us have a role to play in providing a fail-safe mechanism so that a merchant or a consumer or a business can actually use this. Not all answers need to be in the form of a protocol or an algorithm, right? Yes, I'm a programmer, I would love to see that, but I think in reality, it is usually a combination of things that makes that happen.
Just going back to sort of stepping back a bit, I've watched stablecoins and Circle for almost a decade now, and Circle seems in very good shape. I mean, look at this, scale of this conference, and it sort of seems to be winning, because I think Tether is like people say correctly it's for like offshore crypto casinos, and they still won't get audited. I think it's shady as hell. And Binance too. I mean there's I think some regulatory issues there too. But I'm just kind of curious, is USDC kind of one? And the other thing I'm wondering is like the banks, are they going to look at this and go, no, we're going to make our own? So from a competitive point of view, and especially with the high interest rate environments, I mean, Circle's got $50 billion in reserve at 4% interest, and that's all profit. Do the math. Do you think the banks or someone else is going to step in there and sort of say, no, we're going to do this? So I'm not going to toss this to you, Joe, because that's on the spot. But for you guys, just from a competitive point of view, I mean, is this USDC kind of won the day, or is what's going to happen next?
I mean, I'll take a first stab, and I should also give a disclaimer. I was a alumni of Coinbase, helped launch USDC, so I have a special place in my heart for it. But I think it's too early to say anything's won yet, right? And the question back that you asked about the lack of clarity and regulation, I think that's one of the biggest hindrances for larger enterprises and multinationals using stablecoins. And so we're going to see that coming. I know this morning Circle had a few lawmakers speak, Maxine Waters, et cetera, on a potential stablecoin regulation. So I think we need that. And to your point about CBDCs, I think I agree, by the way, like I don't think a Fed coin is coming out, but I think one of the indirect benefits there is that we're going to discuss what a proper issued stablecoin looks like, what the reserves need to look like, how transparent it needs to be. When you send it to another country, how does it need to be custodied, all these sorts of things. And so with that notion, I think competition is good. And while I'm a big fan of USDC and we vetted that before Stripe used it, there are other stablecoins out there, and I think banks will probably come out when there's clear regulation with that, and I think that competition is going to be good for the ecosystem. And in this space, I think to say you've won is a bold claim to make, I think.
It's definitely way too early to tell. And I think it's also an interesting question around as other fiat currencies come on chain. Today, 99% of stablecoins are backed by dollars. We've seen EUROC from Circle. We think it makes sense for most major fiat currencies to be represented in some way on chain. And the question is, what role will banks play? What role will fintechs play in actually creating them? And our position is we want to be currency agnostic. The same way we are today on our network. We don't care whether you want to use dollars or euros. We want to support any version of a dollar that can meet standards for compliance and reserves, and really give it as an option to clients and to let them choose. And so to be currency agnostic and to be protocol agnostic, where what is the currency backing it, who is the company that's issuing it or creating it, and what blockchain it runs on, and there could be many different combinations of those that could exist over time.
Interesting. Joao, in terms of Circle, I should have done my homework more, but there's obviously USDC and there's the a euro version and a pound version. Is that right? Like how many sort of national currencies have you kind of worked your USDC management?
No, you've announced one more there, but there's
special announcement.
There's USDC. That's not an announcement part of Converge. There's USDC and there's EUROC. But we see ourselves bringing more of those instruments to market. I think we have obviously found a construct that we believe that, obviously, as we've been saying, it still depends on how more regulatory clarity, which is going to be slightly different in every region, in every jurisdiction of the world. Hopefully they find like a common path, but it will be slightly different. So obviously pending that, we think we have found a framework that can work for, as Kai said, bringing fiat currencies into this sort of protocol idea. And we are interested. There are other companies building other flavors of other currencies out there. We're interested in partnering with companies as well, but we think we have a role to play in bringing more of those online. I don't know, does that mean we're going to build 200 digital versions of fiat currencies? Probably not. But can we bring the next set of currencies that can facilitate more real-world utility? Because that's really what we're looking at. As Kai said, a lot of the applications for USDC as of the recent past, the last 2 years, and all the growth that we have experimented, they have been intimately connected with crypto capital markets and a lot of the speculative use cases that we saw there. But we see with Stripe, with Checkout, with all the guys here, we see the beginning of the curve for real-world utility. And actually, when you look into that, currencies outside of the dollar, they make a ton more sense than they do in crypto capital markets. There's a lot more interest in people saying, hey, but yes, if I want to do global commerce, if I want to do global settlement, I need these other currencies, and we're definitely looking into it.
Interesting. We're sort of heading towards the end of the panel, so I thought we'd just end like this. I want to ask all of our panelists, what's the biggest stablecoin story going to be in the coming year? What are you most interested or excited about? Start us off, Ash.
Oh, the crystal ball question. Jeff, I mean, for us, and you can see two different takes from Cyril and I's business. Cyril's focused on the payout side. For me, I think where it is solving for some fiat inefficiencies in settlement of funds. So for us in our product, stablecoin settlement, I think will help merchants get access to liquidity a lot faster, and I think that'll be one really good use case to mature out of it.
Okay, settlement?
Yeah, I think settlement is huge, but this is probably more of a hope than it is a bold proclamation. But one of the reasons why really been interested in crypto. It goes back to my days of Uber when I used to work there, where we were having stories of drivers trying to remit money back home and still sending bags of cash and it magically getting home. I'm hoping that stablecoins, especially with the launch of more currencies, can help put a dent in financial inclusion and help entrepreneurs in Africa or Southeast Asia, et cetera, start to accept payments or remit money back home and these sorts of things. And so there's work to be done, but I'm hoping in 5 years we've said that stablecoins actually made a difference in that space.
I feel very similar. I think organic adoption of consumers and businesses in frontier markets, particularly the African continent, countries like Nigeria, there is a lot of demand and interest in stablecoins. And so it's exciting to see what entrepreneurs are building there.
Sophie, with a one-year outlook, I would say initially it's going to be crypto-native businesses wanting to settle. That's where I think most of the focus would be in the near future. That's my view.
Yeah, I think I don't have much to add. I think you guys mentioned really good examples. I think Kai mentioned this before. I think I would hope that in the next year we would see very relevant, perhaps existing financial services and applications leveraging USDC or a protocol like USDC, but in a way that consumers actually don't experiment and don't even realize. It's behind the scenes. They have a dollar balance. They're all of a sudden getting the benefit of sending these funds to places they couldn't send before, but they actually don't even experiment. Why the tech behind this facility?
Yeah, no, just to sum up, I just find it such an exciting, interesting topic right now. It feels like the early internet, because we all have a sense something big is going on, but it's hard to sort of see it or understand it. And I've used this one before, but I just do love the parable of the elephant and the blind scientists, where there's sort of like the three scientists who can't see. They're trying to identify what this elephant is just by touch. One guy's touching the tail, one guy's touching the trunk, and someone's touching the leg, and they're sort of trying to put it together. And that's sort of how I feel where we are right now. And I think in 5 years, we're going to look back and go, well, that was obvious, but right now it's just kind of really hard to see right now. But anyways, I learned a ton. I just want to thank all of our panelists, and thank you all for listening and coming. Really good turnout. So please give them a hand.
Thank you.